Hey, it's Mack with PriceActionTradingSystem.com, and it is Wednesday. It's August 31st. This will be our chart lesson for the day. And just another reminder, tomorrow will chart, be our last chart lesson for uh, the week and for a couple of weeks because I'll be taking vacation the following week. So no chart lessons next week at all. I'll be gone the whole week. So just trying to remind people so as they come in and watch the videos, they won't be wondering why there's no chart lessons or anything, because I will be on vacation and out of the office, and I'm going to take the whole week away from trading. I won't look at the markets at all, and you need a break from it every now and then. So I used to have a hard time leaving, but as you get as this gets more boring, which it should if you want to really get better, you get to the point where you know you look forward to getting a break away from it. So, but anyway, enough about that. I won't be here next week, and no chart lesson on Friday. I'm not doing them on Fridays these days. So tomorrow will be our last one for a couple of weeks. So anyway, today was it was a downtrend all morning, and then right around noontime we got a reversal. Notice that we didn't get a break in a new low here. We got an overshoot, and it just reversed. So this little reversal in here, this was a little difficult. Only saw one really good trade to the upside here, and then another possible one, couple to the downside here. But while I've got this channel, this is a good example of how price action is supposed to look. Notice how it fits. Notice how every time it reaches the high, it turns down. Every time it reaches the low, it turns up. That is exactly how price action is supposed to look. This channel fits perfect, and that's what it's supposed to look like. If your line looks like this, something like that is wrong, or even maybe something like that is probably wrong. And I get that all the time. People, their lines will look like that, but you notice how the price action's not fitting in there neatly. Yeah, it touches it at some point and reverses, but it doesn't fit in there neatly like it should. So I hope that's clear. If you can see that, every time it's touching here, it's turning prices, and every time it's touching the lows, it's turning prices. We got really weak down here at the end, so it still turned prices, but it wasn't much of a turn. So keep that in mind. Trying to think of what else. We went a little flat right here, right after the open, but prices were just moving to the other side. We had a little bit of an uptick here, and then of course we had this support, so we had to work through. And notice how it turned down right off that trend line again. So, um, it's pretty obvious what's going on here. You just have to be real careful about these support areas. You really want to wait till it makes resistance, until the support area turns into resistance. And it didn't take long here, and it was off to the races. So um, pretty clear there. But let me back out here, go through the trades, and we'll wrap today up. One other thing while I'm thinking about it, lots of comments yesterday about my comments, and um, I always appreciate feedback. And um, yeah, this is a difficult thing to learn. It's not easy. I don't want to get on that again today, but I just thought I would sum that up. That there were a lot of comments about it, and I appreciate the feedback. I got a bunch of emails directly from people too, and I appreciate those emails. And but yeah, this is a difficult skill to learn, but it is a skill. Make no mistake, this is a skill, and it can be honed. And not everybody probably has the skill set to do it. I believe that most people, the reason they don't have the skill set is not because they're not smart enough or because they can't figure it out. I think it's because they don't have the ability to stick to it long enough. And that's part of the skill set it takes, the ability to be dedicated to something and to not give up when it seems very difficult or almost impossible to do. So just like I mean, what you hear in this business is that 90% of the people that try to be traders fail. Well, it's probably those numbers are probably very similar for those that try to learn price action. Probably only 10% of them are successful. And so that's no different, really. So it's not that it doesn't work. It's just that some people can't make it work. They don't stick to it long enough, and for all the same reasons they fail as a trader, period, they fail as a price action trader. So I hope that's helpful. But you got to be in this for the long haul. You got to be in it for the long haul. But anyway, let's talk about our trades here. First trade I saw was just after the 7 o'clock hour. It really set up nicely here. This is a trading range. Originally, I had this line way up here, but it moved down as the day progressed. It turns out there was a temporary support here, but really it wasn't a range day at all. It was a trend day. So all this line really ended up being down here was just making you alert of this support and making sure that you know, of course it could have played out at the time when I put it there. It could have played out as a range. So that's why you want to put it there. But once we pushed on through and this two-tiered channel confirmed itself, it's pretty obvious at that point that, hey, this is a downtrend. And this is a perfect channel working lower here. So, and there's short-term trends and trend lines and little ranges within that. So just be aware of that. That's why price action works on any level, because there's trends within trends. This is the redder channel, or kind of reddish brown channel, is the bigger picture for the day. Uh, this is a shorter term trend within it. This is a shorter term trend within it. This is some shorter term sideways stuff within it. Um, and so just keep that in mind. I mean, within this trend coming up, there's sideways stuff here. Within this trend coming down, there's sideways stuff. So there's a little range in there. So that's why price action works on every level, is because there's constantly, there's trends within trends, there's ranges within trends, there's trends within ranges, and there's ranges within ranges and trends within ranges and all that other confusing stuff. So there's something constantly working at every single level here. You don't want to get down to too small a level because you have too many fake outs, and you don't want to get too big because you have to have too big a stop and um, too big a target. And just one little stop can cost you a lot of money if you go to too big a level. So you got to find that sweet spot, and we feel like generally we trade the 2,000 tick chart. Lately the volume has slowed a lot. Pretty good volume today, so I may want to look at going back. I meant to open a 2,000 tick chart today and look at it, and I hadn't had a chance yet. But there's not a whole lot of difference between the two. But once the volume picks back up consistently, we probably want to get back to a 2,000 tick chart. So let's talk about the trades. We were obviously in a trading range. Highs were up here, lows down here. We're coming off the highs. When I came in, we were working up here. I don't have that on there. Let's go ahead and put it on there. You can see that trend working up. And we got a little bit of overshoot, and then it broke the channel here. You had a close outside, push up. It tried to make a new high. You could have considered going short there, but again, that's before 7 o'clock as well. So I think I see that bar closed at 456, so that's way too early. If you were trading then, you'd probably might consider that one, because it's a double test of that level right there. We tested it once, twice, tested it twice. But we pull back and make a lower high here and get a big bearish bar, so I'm ready to go short right there. That's really your signal bar, is this bigger bar. But it doesn't trigger. You just get another lower bar, and you can get a trend line off those first few bars there. So when it broke lower there, I like going short. It's the second entry counting off the high, and you got plenty of room to get out before getting down here, and really almost enough here. You could have considered letting it break lower and drop a limit order in. This is really had to be your signal bar because it's just inside the other one, but your stop would still go up here above this high right here. So I'm going to move that back up there, but I just wanted to make sure you understood that. But you could have let it break lower and drop a limit order, and you would have gotten filled at least a tick in. That's probably the best you would have done on that trade. I doubt you'd have got filled 2 ticks in. So that's a but I'm okay with just going short with a stop right there. Looking forward to test these lows, and look what happens. It pushes right on through. And it gives you a double test, but where it's too much sideways there, there's a little congestion, but it breaks lower, pulls back, tests the trend line again, and gives you a relatively bearish bar. I like going short there. It's close to that low, so that's a concern. But that's a breakout pullback short. And this is a channel, and that's the first, and we hadn't had a close outside of it yet. So I like going short there. You might use a limit order here to get you a little better entry. You could have gotten filled a tick. I doubt you'd got more than a tick back into that one, so that still makes it really close to this low. So you got to be concerned about that um, because sometimes it'll bounce. But I still like that one, just simply because that's like the 7:30, 8 o'clock fake out to the upside. Look how many times we tried to go up. 1, 2, 3, 4. We really can count these 5, 6, 7, 8. There's about 9 or 10 bars that are trying to go higher, and we're making lower highs, and you get the little breakout pullback short there. So I like that one, and it turns out to be a pretty nice trade. And when it bounces here, you probably should have already had this line drawn off these first 3 when it bounced, but then it bounces here again and goes the other way. Just copy that line and drag it up, because you're probably going to have a trend line up here too. And that's exactly where it turns down, right off that upper side. And you can do that quite a bit. Generally, people think you can only find the trend line off this side, but a lot of times you can find it off the opposite side. And when you kind of put it in the middle here, you can see it fitting right down through there as well. So that gives you more confirmation that, hey, yeah, something's happening here. This looks valid. But anyway, on the shorter term trend line, we get a close outside here. We try to go short once. We try to go short twice. And then we try to go short again, and it fails, and you get a double test, 1, 2 of this level right here, and that's a big bullish reversal type bar. Plus, this was a range, so this is like a failed break lower. So there's a lot of reasons to think, hey, let's go long there. There's not a lot of room before that high, but this, again, this is a breakout pullback long. Really, your line would have been a little bit lower here. I like to use the closes. And notice how it broke out, pulled back. So it's a breakout pullback long. And so that's why I like it without being enough, just like this was a breakout pullback short. And you're looking for prices to probably come back and test this breakout area again. And notice that's exactly where they go. But notice too, that if you drew your line here and drug it up, it also fits for that purpose as well. So it works both ways. You got a trend line working up. It's really more sideways here than anything. And you get that breakout pullback long, and then it's just kind of going sideways again, all the way across here. But you do get a close outside this trend line. It tries to go higher 3 times, and it can't get through that trend line. And so I like this. This is a failed second entry long, so that's a trap. Doesn't have to be a perfect signal bar there. Go short, and you're just looking for prices to come back down and test this, although they could keep going. And really, at this point, I would draw my first move down, and then I'd be looking for a measured move. And notice we went right in there, and then we bounced and kind of went sideways before we continued lower. So that would have given you a reason to look for it to come all the way back down to this other side as well. And notice it's right to that point. And that's usually telling you something when that's the case. So yeah, this turns out to be a nice trap. And you can tell it was a good trap because look how it shot right down. And then of course it bounced at the support area. You could have considered going long here. I didn't like it because it's got all that overlap, and there's a doji in there, a couple of dojis in there. So, I mean, you probably could make that one green. I'll give you that one. But I think you're better off to skip it because we're still in a downtrend based on this channel. And even though you got some support here, there's a good chance it could just break higher and push on through. It ends up pushing on up and would have worked, but I don't think it was worth it. And you do have a little bit of a trend working up through there. You get a close outside, move to a new high, it turns down. The only reason I don't like going short there, it's a key entry point, um, but it's a bullish bar. It's really close to the support area that could bounce even again, even if we're going lower. Um, we are making lower highs. The stem was higher here than here, and even the close is a little higher. But you needed that because you had this trend work it up and the close outside to move to a new high. But I just think that's too risky. But it pushes right on through, pulls back, gives you that breakout pullback short. That's not the perfect signal bar. It's fairly bearish. I'd let it break lower and use a limit order, or I'd skip it and see if you get another opportunity to enter. But you wouldn't have got another one. It just, the bottom fell on out of it. And again, you were looking for your measured move down here. But actually, I didn't mean to. But you also, once this move took off, look for a measured move like that one. And you can see that's pretty much what we got before it bounced right there. So always use your measured moves, and I would measure that one again and look for when it took off again. Measure that one, and then look for that one. And that's a pretty much within a tick of being a perfect measured move. So, but again, I'm going to leave that one green. It's a little bit aggressive. So, okay, I had a slight interruption, but we were talking about this trade here. And notice you got a little trend line off those first two swings. You get a close outside, move to a new low, and then it kind of tries to correct. And really, you would expect it from this point. You're expected to try to move over, and the fact that it got over there but was going down instead of up, that tells you the market's really, really weak. And look how it took off again. Where here, notice when we were correcting back to the other side, we were working up. But here, when we start correcting to the other side, we can't even go up. It's still working down, but while it's working to the other side. That's why it kind of gets congestive and doesn't take off, because prices should be going to this other side, and that's what the price. We know that because of how price action works. It goes from each side of the channel. And so once we touch here, we're looking for it to come over here, but like everything price action, it doesn't mean it's going to go straight up to get there. The market's weak, so it's working over to get there, and it still gets there. But look what happens when it gets to that key entry point. Boom, the bottom falls out of it. That's where your good trades are going to be. But anyway, back to the next trade. We bounce off the low, and we get a little trend working up, and you would expect this to maybe work all the way, or maybe get a second swing, but it just starts going sideways. It can't even go higher. And look what happens. You get a close outside, first entry long, pull back second entry long. You're making a lower high here. That's a failed second entry long. It's right off the midline, right off the EMA. They're running congruently there. Just go short there. That's very bearish. And again, you don't have a lot of room here. It's really close to being 4 ticks. I think it's probably exactly 4 ticks. But anyway, you might use a limit order because that is a doji, but it doesn't matter about your signal bar if it's a trap. So when it broke lower, drop your limit order, a tick or so back in there to make sure you got enough room to get out, and quick, easy trade. And then first entry, second entry, same thing, right off the EMA, right off the trend, the midline. It went higher first. As soon as it goes out the other side, goes short. Another quick, easy move. And notice how we're not getting back down there, but that's because we've already gotten down to the low side and we're working over. Should be trying to work to the other side. And you get a little reversal here, but this thing is really bearish, so we're not looking for any longs right in here. You get a close outside, move to a new high. But that's not bearish enough bar. This one's pretty bearish, but it's too close to the lows. So just wait, see what happens. And it does come back, and you get a second entry short right off of the trend line, which is a key entry point. Really bearish bar there. Put your stop below it, go short, and this thing's off to the races. And look at it. a runner you could have ridden all the way down. I probably would have looked to exit here, but a lot of times you're better off to wait till you make the new low and then take the first higher bar that breaks higher, which would have been here. So that would have got you a little more room. But this is still a really nice trade from here to there. And of course, we get the overshoot right here. We don't, and we haven't had a close outside, but that overshoot's pretty telling. And then you finally get a reversal. It's tempting right here to go long because that's two tries to go lower that fail. That's really a double test. Even though it's not straight across, it's a double test of this low. So you could make the argument for that one being that far away from the EMA and an overshoot. So, but this has been a pretty strong downtrend, and I don't recommend trying to pick any bottoms in here, but I feel like it was probably worth talking about. You get a trend up, you get a close outside, first entry, pull back. There's a second entry long there, but you're just going sideways. And then you get this drop down, and it tests that level one more time and reverses. But again, I still don't think you want to go long in here. It does give you a trend line working up off those first couple of swings. And then you get your failed second entry short right here. It actually went lower, made a higher low, went lower again, but it hadn't broke higher yet. So as soon as it breaks higher, it would be considered a failed second entry short, and that was right here. So I like going long right there, just because you should get a new high in there. And we did have the overshoot. Yeah, you have to be careful here because this was a pretty strong downtrend, and even though we had an overshoot, it doesn't mean you won't get a retest of the low. Sometimes you don't. So you definitely want this to be a trap, and this is a trend line working up. It's obvious, it's valid. This is the first close outside, and you got that little double move down, so I guarantee you they trapped people. So I like going long right there. And, you know, it's a trap. It doesn't have to be a perfect signal bar. It's fairly bullish. Would have liked it better if it closed on its very high. But look at it go. You can tell they trap people to the short side because of how quickly it shoots out of there. And then, of course, we haven't made a new low yet. So if you get a short setup, you want to consider it. And notice what happens here. You got the close, a big move up to the upper side, a first entry long, pull back, second entry long, it fails. Look at that big bearish bar. Go short right there just to try to get back to the EMA, if nothing, but you might catch a high and it run all the way down and test the low again. You might have considered a limit order here, wait till it breaks lower, and you could have gotten filled, maybe back up to the low of that green bar right there. And maybe one more tick, you just never know. But it took a minute to kind of get going, but that was a pretty good trade. But notice that's a double top too. And so first entry long, pull back second entry long. So there's a second entry long that fails again, and you pretty much got a trend line working right there with a third touch confirmation. But you're so close to that EMA that I'm just a little leery of it, so I did make that one green. It's late in the day. Turned out to be a pretty good trade, but you don't know that going into it, so you know you have to play it by the rules. And so for that reason, it's relatively aggressive. So, but yeah, a really good trading day. The trading has picked up lately. We've been getting some nice trends, but this is a nice downtrend. And really, you should be done well before noon here. If you're paying attention and taking the best trades, you should be done probably. You know, you don't need to wait till this late in the afternoon. I hate trading in the afternoon. I really do. And even though it continued to work higher, this would have been a good setup right here. And this is right at the fringe. I'd be okay if anybody took that trade because it confirmed the first two swings give you the trend line, and then this third one confirmed it. And look how it took off. But again, notice where all your best moves come from. They come from the key entry points. Off the highs of this, what was a range here, look out, off the trend line right there, boom. Off the trend line right there, boom. Off the trend line, boom. And then on the way up, off the trend line, boom. And when it comes back to the trend line again, it takes off again. Of course, it's right into the close, but that's where your moves come from. So learn to find these places and learn to wait on the setups that come at those places. If you just did that alone, you'd probably do pretty well. So, and just remember, I haven't said it enough lately, but just remember, anytime you're unsure about a trade, the correct answer is no trade. Um, so don't guess at it. If you're not 100% sure that you're reading the price action right or you're a little iffy, just skip that trade. And just because and if it does work and you don't, the worst thing you can do is go back and say, I knew I should have taken that trade, and then beat yourself up all over it, because that'll force you to take it next time, and then next time it won't work and you'll be wrong. And so, once a trade is gone, if you missed it, do not let that worry you. Don't look back on what could have been, should have been. Just wait for the next opportunity and keep your head up. I mean, that's the best way to do it, because if this so much of what we do is emotional, based off emotions and things, and you have to keep those emotions out of trading to be successful. That's one of the things you have to work on, and some people can't separate their emotions ever, and those people will probably never make it as a trader. This needs to become boring and mechanical, and when you get to that point and when you start to feel that it's boring and mechanical, that's when you know you're getting close. So anyway, I'm going to wrap it up for the day. We'll be back to wrap up our week tomorrow. Hope you had a good trading day. Hope you're having a great week. We'll be back again to do it tomorrow. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.